Happy Saturday morning. That means it is time for Cynthia Hash to stick a yard sign in your lawn and hold court, a little infotainment as you learn a little bit more about the singular biggest investment you'll ever make, the home you live in. Cynthia, good morning. How are you doing?
Joe, I'm doing great. Thanks for the introduction. I tell you, we got some a very interesting last quarter going on right now.
Have you been
hmm
pouring through the last quarter, the what do they call it, Q3?
Q3, yeah.
Yeah.
Actually, Q4 is the last one.
Well, yeah, but that's the one we're in now, right?
Yeah, yeah,
Yeah.
that's right. The previous one and then now this one, and we're on month to month right now. And then once that's finished, the Q4 won't come out until January sometime. Uh, but I can tell you, I've seen a big difference between Q2 and Q3. It's
What
already
kind of?
It's already Q4, right?
Mhm.
And it is a huge difference. I'm seeing lots more price reductions. I'm seeing lots more days on market. I'm seeing more and more people getting out of contracts over home inspection issues.
Wow.
Yeah, it's happening, and it's happening fairly rapidly.
So
hmm
that all those add up to being it's a rougher time for sellers, aren't they?
It is. So it's been unfairly so a seller's market for, since COVID.
Okay.
Yeah, it's been so off kilter that it was bound to have some sort of correction. What I'm grateful for so far is that correction is not that immediate crash. You know,
Oh, it's not abrupt.
yeah,
Okay.
exactly. It like it was in the oh 05, oh 06, oh 07, and then crash in oh 08,
Yeah, yeah.
that was abrupt and that was very painful.
Hmm.
Yeah.
A lot of people. A lot
Mm,
of people.
yep, yep. I don't feel that this is the way this correction is happening. I think it's happening a little bit more gradually,
Hmm.
which is actually good. But I really want to kind of warn both sellers and buyers in a different way.
Okay.
And so focusing strictly on sellers right now, um, it's really a pitiful shame when somebody tells you, well, here's this $500,000 house,
Hmm.
and they say, you've had the conversation, the thing has been paid off, so they have nothing but equity in it, and they are, they have. Gotten either, life insurance from a spouse or some, a parent or, somebody, whatever. And then you say, well, we're in a shifting market, so I think we're going to need to do a price reduction or something like that. And then they go, well, I'm not giving the house away.
It's an understandable feeling. I mean,
Yeah.
if you get your mind set on a price, it's tough to hear that it's not worth what you ask for it.
Well, yeah, it is tough to hear,
Yeah.
but it's that are you really giving it away if all of it is you don't owe a thing on it,
That's
you
true. I
know?
mean, it's an unfair statement. I mean, that's true. I
Yeah.
agree with you on that.
Yeah, it is. And the thing is what they'll have a tendency to do is only hear what they want to hear.
Hmm.
So you say, okay, well, we'll list it for X, and if it doesn't, if it doesn't sell within a few weeks or month or something like that, then we're going to have to do a price reduction. And by the way, this is how much your net is going to be. So you take out, commissions, you take out closing costs, you take
Hmm.
out, the cost of doing business. Okay.
Right. You
You
know,
t-
the things,
mhm.
and the net is what's left over for you at the end.
Correct, correct. But unfortunately, all they see is the list price and they think they're going to get 100% of it in their
Yeah,
pockets,
that's
because
true.
they just weren't paying attention, that kind of thing. So what I'm asking for sellers right now is to start paying closer attention because you're not going to get ev- you know it's not going to be as easy as it was during COVID and all the
Yeah.
the 3 to 5 years afterwards, right? And I know we're past it, and we've been past it for a while, but it takes a while for the consumers to build trust back into society so that they, feel comfortable enough to start buying and selling again.
Hmm.
And right now, I can say that there are always, okay, not even now, just always, three types of properties that are on the market. Three
Okay.
different types. The opportunity types, the deal, and then everything else.
Okay.
Okay.
All right.
So the opportunity properties, those are the properties that people actually are, most people want it, so they'll sell. It'll sell.
Okay.
Okay. Most people want it and it will sell. That would be like a new listing, less
Okay.
than 60 days on the market. Okay. And we're starting to see months now on the market instead of just days and weeks. Okay.
Is that
Uh,
impact the buy? Is that sort of the buyers, after a bit, they've been looking for 60, 80 days,
mhm.
and when they see something new, they've looked at everything else, so they see something new and they jump at it?
Yes,
Okay.
it is. Because the what happens when you stay on the market for too long, it becomes what's called a stale listing. And but these opportunity properties, they're usually priced at the low end of the range of what the
Okay.
value is. Okay? What the last 6 months has said to us in the market. And then usually you can get in it within 30 or 40 days. So a 30 to 40 day occupancy.
Okay.
It has to, these are opportunity properties now, okay?
Hmm.
They are, they're in excellent condition. They have certain added values, maybe some upgrades, okay?
Hmm.
Maybe they've even had a pre-listing inspection or a pre-listing appraisal. So you kind of already have an idea of what that is. Most people are going to want those properties. That's why they're called opportunity properties.
Hmm.
And then that you have a second set of types of properties. That's the quote unquote deal, those deal properties, right? Well, those are the ones that are going to sell also, but they're distressed. So they're going to sell for a different reason. Price, it basically it's all about the price.
Hmm.
So it's like one or two price ranges below what the price, a market price would normally be. They basically increase the value until it matches the price, right? So the
Okay.
conditions poor, needs work, and
Hmm.
it could be maybe a bank-owned property or short sale property, something like that. Those will sell, but for different reasons. And it's not going to get, the highest price in on the market either.
Right, but there's going to be some required fixing up to do
Correct.
or something along those lines. There's more than just the purchase price to get into the house.
Exactly, right. And if you've got the extra money, sometimes you can do like seller concessions where they pay for perhaps some sort of closing costs for you. And then that way you can keep the money that you would normally pay towards closing costs for
Hmm.
some of the fix-ups.
Now, if I remember back in '07, '08, as we
Hmm.
were kind of going through the crash and banks were trying to
Hmm.
soften the landing on some of it, if I remember correctly, the banks that had foreclosed on a lot of these houses were actually making those kind of deals. We're saying, listen, we're not going to bother with just to get the
Yeah.
asset off of their ledger.
Well, here's the dirty little secret about those times, because I remember them very vividly.
Hmm.
And that is that, you've heard of MIP or PMI or whatever, those kinds of insurances.
Hmm.
Well, believe it or not, the REO banks, everybody kind of almost felt sorry for them in some way, like, geez, these banks are losing their shirts, right? Except for they're not because they were insured. And so that when the mortgage is insured like that, and guess what? The owner, the buyer, whatever, they are actually paying for it anyway,
Yeah.
right? And so what happens is they put in their claim, okay, and they
Mhm.
know how much they're going to be getting back from that claim, and then they short sell it and then or REO it or whatever they're doing, and then turn around and get that money and end up, still getting that claim back.
Right. So they're
Yeah.
they're made whole.
They're made
Yeah.
whole.
Yeah.
Yeah. Yeah. For the most part. I mean, not all of them, because, there's some that just crashed with the market.
Well, they were
Um,
the banks that were heavily into it. I mean,
yeah.
just and obviously the banks that are still
Hmm.
around are the ones that weren't so heavily into this, so
Yeah.
leveraged onto the situation.
That's right. That's right. So we're talking about a third set now here.
Hmm.
Okay. That's every daggone thing else. Okay. And a
Okay.
lot of times they expire. Uh, and which means they don't sell. Okay.
Okay.
So if you're in in that type of market, you've got about 40% of those properties won't even sell even in a given market. And that's,
40%.
yeah, that's because buyer wants value, seller wants price.
Yeah. Okay.
And so if you don't meet that um, weighing match. It's got to be a win-win kind of thing or no deal kind of thing.
Okay.
So those are the three types of properties. The other thing that I wanted to discuss, and this is for sellers only, right? So your pricing, there's pricing misconceptions out there. It's like, okay, well, I paid this for it,
Hmm.
or I need this for it.
Yeah.
Or I want this for it,
Sure.
or my neighbor got said this,
Oh,
so
that's
my
a tough
neighbor
one.
must know, right?
Yeah.
You know, and maybe, well, that other agent told me this. Well,
Ooh. Ooh.
eh,
Yeah.
the other agent might have just been blowing smoke up your skirt, okay? Just to get the listing so they can put their sign in the yard.
Hmm.
Well, it would cost this much to rebuild it today.
Oh, yeah.
Yeah.
That's a tough one to go through, especially if somebody built the house
Hmm.
themselves and they've lived there their whole life.
Yeah. Well, and the thing is that you can't compare apples to oranges. It's just not a smart thing to do.
Do
But
do people go around to look at new construction and say, well, the same size as my house, so my house should be that value?
I guess some of them do, because that's definitely one of the six big pricing misconceptions.
Hmm.
So yeah, probably some of them do. But this is where you have to get a professional agent who's going to tell you what you need to hear, not what you want to hear. Okay, big difference.
Yeah.
The value of your property is determined by what a buyer is willing to pay in
No.
today's market based on comparing your property to others sold in your area. Now, keep this in mind. We're in a shifting market right now. So it doesn't even it matters, but it doesn't. It matters a lot what the last 6 months or last 12 months in comparables have done. But then you've got to look at the graphs. Where are we going?
Okay, where's it
Okay.
heading? Yeah, I see what you mean.
Uh-huh. And so if buyers always determine value, regardless of what market we're in, whether it's a buyer's market, a stable market, or a seller's market, it's very important to price your property at whatever the competitive market value is at the signing of the listing agreement. Okay.
Okay.
So, and I will tell you a little secret. Historically, your first offer is usually your best offer.
Is it really?
Hmm. Yep,
Um,
historically.
Having never sold a house, I wouldn't know that, but it just would strike me that,
Hmm.
holding out until you find the best offer but that's
It's
historically.
actually it's actually unwise a lot of
Hmm.
times to do that, especially if you're in a shifting market or a stable market or a buyer's market. Those
Okay.
kinds of things don't hold out. And even when it's a seller's market, even, that first offer might be the very best one. Why? Because they're giving you something, they know that it's going to be a multiple offer situation, so they're going to, that might be even if you gather them all together, if there's a bunch of multiple offers, but those days are kind of behind us now. Yeah.
Mm.
And so,
Hmm.
but these are
Okay.
things that you do and don't control. So what you can't control as a seller is this. You cannot control the competition and the market conditions. You cannot control the interest rates. You cannot control that perfect buyer you're waiting for, and you cannot control that you might get a low offer, or maybe you not might not get an offer at all. Those
Oh
are the
boy.
things you can't control. What can you control? What you can control is the property condition. Okay. What
Fair.
you can control is the availability for showing. What you can control is maybe you should offer a home warranty plan. Offer something, like put a carrot out there.
A
Um,
warranty, is that something you purchase or is that
mhm.
something you would offer as the home seller to?
As the home seller, you could purchase one and then you can transfer it over to the buyer for a year.
Interesting.
So you put in a couple little carrots in there, maybe seller concessions or
Hmm.
something of that nature. And maybe you can control the counter offer. So just because you might have maybe got a lot low ball offer doesn't mean that counter offer can't be reasonable, and come back and maybe, split the difference in some way, shape, or form, right?
Hmm. Right.
So what you need to do as sellers is focus on results and have the proper balance. And once you get those proper balance, then the factors will basically expedite your sale. So what's the balance? You have to balance the price with the terms, the condition with the competition, and the location with the timing. Just balance those things,
Hmm.
and then you'll end up being in a win-win. But I can tell you, if your asking price is too high, this is what happens. More buyers purchase their properties at market value than above market value if you're in a stable market, which is kind of where we're getting close to being right now. So if you price your property at market value, you are exposing it to a much greater percentage of prospective buyers, and you're increasing your opportunity for sale. If you So market value, let's say that's smack in the middle, and you go, well, I'm just going to put it above, maybe 10-20% above the market value so that I can, have room to negotiate. No, that's not the way buyers buy anymore. They don't do that anymore. So you have to weigh your asking price to the percentage of buyers that you might have out there.
Hmm.
If it's at market value, then you're going to have about 60% of the buyers out there. If it's 10% below the market value, though, you're going to get 75% more, 75% buyers, 15% more.
Okay.
Yeah.
So I
Hmm.
guess it depends on what your motivation is. I mean, if you need to, maybe you have to move or you just,
Yeah.
and you want more offers quickly, you
Hmm.
price one way, I guess is what you're saying.
Yeah, yeah. So that's exactly right. So if you price it down 10% below the market value, you're going to get more of an opportunity to maybe even get a multiple offer situation when their multiple offers aren't happening as much anymore.
Yeah.
Yeah.
No,
So,
let me ask you
mhm.
this. Is working with a realtor, and obviously, I don't think any of us, unless we're already realtors, and I see you out there, but, if we don't know, because there's a factor I don't think a lot of people do that I imagine, a realtor understands because you must get demographic reports and research being done
Right.
constantly. That's the point of these associations like National Association of Realtors in
Yeah.
Virginia is to work through the market so you know what the people are looking to spend. When you talk
Yes.
to a seller, you must already know, is it softening? Are people having less money? Are home mortgages less likely to be made? Those things are all going to weigh into
Hmm.
it, I imagine, right?
They are. Everything's going to, well, there. it's kind of really interesting how much the housing market and the general economy depend on each other. It's really pretty amazing.
Hmm.
So, and I can say that, you're if you're balancing all of those things, there's no crystal ball. So if you're going in a down trajectory, then it would make sense not to price your property right at market value or above market value, but instead 5 or 10% below market value.
That makes sense.
you know? And quite frankly, here's the other thing. Activity. If you are, if you've been on the market for 2 weeks, your peak is already over.
Wow.
hmm
So now
So,
what do you tell somebody when their house is not sold, in a month or 2 months? Do you say lower the price, or do you take, because I've heard people say
mhm.
take it off the market for a month and let people forget about it and then bring it back with a different price, or just change the price as you fly?
Well, here's the thing. The price reductions, and we don't have enough time to go into everything about price reductions, right now for because the next set I was going to do is probably going to have to wait till next week. But
Okay.
it's about buyers and what are price reductions? What does that really mean?
Okay.
Okay, from a seller standpoint, sellers think, well, I don't want to do that because I don't want to give my house away,
Hmm.
right?
Right. You said that. That's a
Yeah, but it's if you're
overreaction.
yeah, and it's usually not accurate
Hmm.
because, I mean, you're not giving your house away if you're selling it for 500,000 and making gobs of equity,
Hmm.
and you have to put in a $10,000 HVAC system because you got an old one in there
Yeah.
that's not quite working exactly right. You're not giving the house away. It's like you're saying $10,000 is that's what I'm getting for the house. No, you're getting $500,000 for the house. You're giving, you know,
That's just the amount more than you put into it or whatever.
yeah, you might need to
Yeah.
put in $10,000 in order to sell it for 500, but you're
True.
not giving away the house, right? So, but a property usually attracts the most activity from the real estate community and, all the potential buyers that are out there when it's first listed. So usually within the first 2 to 3 weeks, that's where you are going to get the most showings. That's where you're going to get the most interest. That's where you're going to get the most phone calls,
Hmm.
etc. And basically, do you want the price your house to sell it quickly or price it to sit on the market for a long time?
Hmm.
You got to make a decision there. And it has the greatest opportunity to sell when it's new to the market. Why? Because new to the market, it was different in 2020 and 2021 and 2022 and 2023.
They hung around for a while.
Yeah, exactly. It's very different now than it was then. It's the same thing like in 2005 when 2008 came along, the market was completely different.
Hmm.
I mean, completely different. And so your days on market is going to increase as the as the shifting market comes about, and it's no longer a very high, unfairly high seller's market, and instead it becomes more of a stable market and more of a buyer's market.
Hmm.
And then, so you figure it's a simple case of supply and demand. So you're going to have more properties on the market when when the seller's market begins to decline.
Okay.
Okay. And so that's the way it is. And it's just so you get you have a price reduction, stuff like that. Quite frankly, if the price is not reduced, you might stay on the market for a month.
Mm.
Okay. If the price is reduced, you're going to be on the market for 3 or 4 months.
Wow.
Yeah. So a price reduction isn't always very helpful to sellers if this is why you should price it right the first time. Just
Yeah.
price it right the first time. And it's so super duper important. But the market's always been from the beginning of time. It's always been like a seesaw. Okay. Where if it's a seller's market, which is what it's been, since COVID, basically, you have more buyers and way less inventory.
Sure.
So buyers get emotional and hyped up and the price gets hyped up. In a buyer's market though, you have fewer buyers and the prices go down because you have more inventory.
Right. And the
Mhm.
buyer can say, no, I don't want that one. I'm going to look for something else and walk away.
That's exactly right, and they sure can do that. And you don't want to chase the market either. So if you think you're up, if you're a seller and you're up there too a little bit too high, you go, well, I can always reduce it. Well, yeah, but you got an offer and it was less than what you wanted, but you turned it down, you know, and
And now you want to lower the.
and now you want to lower the price because you feel like you're not getting any traction, which
Hmm.
you're not going to, because quite frankly, the longer, the higher you price it, you know, seller wants the price, okay? Then all of a sudden, that's what they want. They're not going with what their agent says or whatever. Then
Right.
they have a price correction, which is a price reduction. Okay, well then they go for another little while and then another price reduction and then another price reduction, okay? And then guess what? They never get what they wanted anyway. you know? So
Yeah.
it's really, really smart to price it right the first time, quite frankly. And
Yeah.
and there is a cost of overpricing, even in a stable market, which is roughly we're getting there. We're getting to be a stable market.
Hmm.
So that cost of overpricing in a stable market, basically, that's where the fair market value is basically driven by what buyers will pay for what their perceived worth is.
Hmm.
And then the seller hopes for a higher initial price, and then they put it there and they think that it'll draw a higher offer. Well, the absolute opposite happens.
Wow.
hmm And so then market interest is basically highest for new listings, right?
Hmm.
So, and then it starts to wane after 2, 3 weeks, 4 weeks. It starts to wane off. Nobody's looking at it
Okay.
anymore. Okay. And then when then listings become stale, like I mentioned before, so that market psychology ends up reducing the saleable price again in the minds of the
Wow.
buyer. And so the
That is
price
wild.
reductions, they're still necessary to attract buyer attention, but you got to have that conversation with your seller right up front. The actual list price corresponds with the current saleable price. If it does that, it's better.
Right.
Okay, if
Then
the
you don't
actual
have to do the price
hmm
reduction.
Exactly. So it might seem counterintuitive, but properties initially priced above fair market value tend to sell for less than they could have if the original price had looked more attractive to the buyers to begin with.
So it's really, you think you're going to get more money by listing it for more, but you're actually not.
Yeah, because you're listing it for out of the market. This out of the market, like gray area is theirs. Like, well, it's like, why are you listing it for that? And buyers look at it like, well, that's not worth that. I was
Right.
just in a house the other day. It's definitely not worth that. That kind of thing. If you price it in the market, like in and under, right there, then that's the sweet spot,
Right. Well,
and
that's
that's
why
when
it's
you'll
important
sell.
to have somebody like you, a realtor,
Mhm.
who has the experience and the ethical underpinnings to
Yeah.
tell you the truth to your face.
Exactly. That's exactly right. And we'll help you as much as possible. We'll tell you what you need to hear, And we will do market analyses and take care of you. And, hey, if you ever just, I hope folks listen to our podcasts, our radio podcasts. And you can go to http://findhomesrealty.com/podcast and listen to a bunch of our SoundCloud recordings, and you'll hear Joe and I talk about all kinds of stuff.
Well, I'm just along for the ride. I'm taking notes here. At some point, somebody's going to ask me if I remember any of this, and I won't be able to call you. So we appreciate it. You have a wonderful Saturday, Cynthia, and we'll talk to you next week.
All right, thanks. You take care, okay? All right.